Hello everyone and happy Year of the Snake! On behalf of the production team at Squarefoot, we wish you a year of joy, prosperity, and wisdom. Wisdom about the property market. As we step into the new year, the US Fed and Hong Kong banks are holding interest rates steady, and the property market is taking a festive pause as buyers and sellers wait for brighter prospects ahead. Aside from interest rates, we'll take a look at the new property sales that gained momentum during the holidays, cautious trends in the secondary market, as well as recent notable transactions and the fall of negative equity cases hinting at stable property prices. Starting off, the US Federal Reserve announced last week that interest rates remain unchanged at 4.25% to 4.5% as expected. Their statement noted that economic activity continues to expand steadily, with unemployment remaining low over recent months. However, inflation remains elevated. The Fed stated that any rate cuts would only occur after substantial progress in lowering inflation or signs of a weakened job market, and Fed Chair Jerome Powell also reiterated that there was no rush to cut rates. In Hong Kong, banks have also kept the prime rate unchanged at 4.25%. This decision to maintain rates has had little impact on recent market activity. From the first to the third day of the Lunar New Year, the first-time property market recorded only 7 deals, reflecting the traditionally quiet period during the holiday. Among the notable sales, a luxury flat at 233 Prince Edward Road West in Ho Man Tin sold for 31.17 million Hong Kong dollars, including 1 parking space. The unit, located on the 17th floor, has a saleable area of 1,038 square feet with 4 bedrooms, setting a new record for the project at 30,029 Hong Kong dollars per square foot. On the 4th day of the new year, the second phase of sales began for Gold Coast Bay The Reserve in Tuen Mun, offering 133 units. Over the weekend, 31 units were sold, accounting for 23% of the second phase. While the sales performance was moderate, it contributed to a doubling of overall first-hand property transactions over the weekend, with 51 deals recorded. This included 3 sales at Grand Seasons in Lohas Park on the 2nd of February, one of which involved a buyer who purchased 2 one-bedroom units for rental purposes. One of the units, Unit E on the 16th floor of Block 1A, sold for 4.61 million Hong Kong dollars at 14,272 Hong Kong dollars per square foot, with a saleable area of 323 square feet. The other was Unit E on the 16th floor of Block 1B, sold for 4.596 million Hong Kong dollars at 14,273 dollars per square foot, measuring 322 square feet in size. In the secondary market, the top 10 blue-chip housing estates recorded just 1 transaction over the weekend, marking the lowest Lunar New Year weekend activity in recent years. However, from the first to third day of the new year, a total of 3 deals were recorded. In the secondary market, notable transactions included a high-floor 2-bedroom unit in Block 9 of Caribbean Coast in Tung Chung, which sold for 5.47 million Hong Kong dollars on the third day of the new year. The unit has a saleable area of about 550 square feet at about 9,980 Hong Kong dollars per square foot, considered in line with recent market levels. The original owner bought the flat in 2004 for 2.176 million Hong Kong dollars, and after holding it for 21 years, earned a profit of $3.29 million as the unit's value increased to 1.5 times its original price. Agents attributed the subdued secondary market activity to holiday travel, which reduced property viewings and the upcoming fiscal budget announcement at the end of the month. As a result, buyers and sellers are adopting a wait-and-see approach, hoping for measures to stimulate the economy and property market. The rental market, particularly for luxury properties, is expected to be another key driver of the broader market in the coming year. Rental prices remain high, offering attractive returns for investors. A standout case in December involved a house at 11 Plantation Road on the Peak, rented for 1.3 million Hong Kong dollars per month. This represents an 18% increase from its previous rent of $1.1 million per month. The property, at over 10,000 square feet, offers views of Victoria Harbour and the Southern District, along with a 2,333 square foot garden and a private garage. The rental rate translates to 120 Hong Kong dollars per square foot, making it one of the largest rental deals in 3 years. In comparison, Duke's Place at Jardines Lookout is currently seeking tenants at an asking rent of 2.8 million Hong Kong dollars per month, with a record-breaking per square foot rent of $400. However, agents anticipate challenges in securing a tenant for such a high price. Meanwhile, residential property prices experienced a slight rebound last quarter, leading to a 5.7% quarterly drop in negative equity cases by the end of 2024. The total stood at 38,389 cases, still the second highest level in the past 20 years. The delinquency rate for residential negative equity cases, those with missed payments exceeding 3 months, rose slightly by 0.02 percentage points to 0.15% last quarter, but remains at low levels. Mortgage brokers anticipate that the favorable conditions that emerged in late 2024 will continue to drive the market's recovery. They also expect home prices to stabilize and rise this year, with the number of negative equity cases likely to decline further in the second quarter of 2025. For more information on the secondhand market, stay till the end of this video for this week's recap of secondhand transactions across each district. That's all for this episode. See you in the next.